All right, yo, what is up for y'all watching this on the YouTube replay? I hope you were having a great Friday. Yeah, happy Friday. Let me give you a quick portfolio update. Then we'll look at some stocks to potentially buy next week because I'm getting paid next week and I'm going to have some extra cash ready to buy the dip. And here are some stocks that I'm potentially going to be looking at to buy now. Some stocks that aren't like ridiculously overvalued because a lot of stocks right now are at some pretty tough valuations to pay. Like in this portfolio right here, I wouldn't buy a lot of the stocks on this list right here just because the valuations are really high. But there are some I really like right now. Like SFM, Sprouts Farmers Market looks great right now. They're like a grocery store. But let me give you a quick portfolio update. This right here is my main taxable dividend growth portfolio. So every stock in here pays a dividend. And on the day, we are down 0.74%, but year to date, we're up 15. And here's my total percent change in every stock. I like being fully transparent. I feel like no other TikTok live streamers really do this. So I just try and be fully transparent. I also have a Roth IRA, which is pretty much at an all-time high today. Yeah, new all-time high today in my Roth IRA, thanks to InnoData right here. You won't believe it, but this stock is up 55% just in 1 week. And so we're up 92% on our position now. Legit, most of these gains have just come from the past week. It's like the only stock green in here besides Main Street Capital, but all our other stocks are red. But we're up 15% on time thanks to InnoData, which is pretty cool. But yeah, that's this portfolio. Let me give you an update on my buy and hold account. So once I buy a stock in here, I try not to ever sell it. If you look in the top left, it's called my buy and hold portfolio. And here are all the stocks that I own in here. The only stock green on the day is Powell Industries. Powell Industries is actually having a great looking chart. I mean, look at that. That's a new like multi-month high. I don't know if anyone does technical analysis, but let me know. Does this chart look pretty bullish on the weekly? I think so. So that's one. I'm not selling a single share of that position. And then finally, we have everyone's favorite, my growthy portfolio. I'm up 17% all time, which isn't great to be honest with you. But here are all my stocks by my biggest winners. Probably a lot of stocks you've heard of before, like Reddit, Robinhood, SoFi, Disney, AMD, Super Microcomputer, which is, I think, yeah, up 3% today, T-Rowe, T-Mobile, Toast, Progressive. And then one stock I think is actually looking like a pretty fair valuation right now is ticker symbol SFM. Not financial advice, of course, but this will be the first stock I want to go over that I think is at a pretty attractive valuation. So Sprouts Farmers Market, if you're wondering what this is a grocery store. They're like a healthy grocery store. And yeah, if we go to their multiple right here, they're trading at a 28 PE. So they're trading at 28 times net income. That seems pretty fair. And here's the best part about this stock. If we look at their revenue, the revenue is up 17, but the net income is up by 40. That means they're expanding their net margins, and that's what you really watch for the grocery stores, which is historically a very low margin business. Kroger has under 2% net margins. Well, this company has triple, quadruple their margins because they're a more healthy oriented grocery store. And I think Americans are like trending toward that. So anyway, that's a stock that I think is pretty cool. They also, oh my goodness, they also have insane share buybacks. They literally buy back like 3% of the entire company a year. Yo, what up, Dylan? Is there a potential recession within unemployment rising, inflation rising? Yeah, definitely could be. Looks like the market isn't, market's at all-time highs today. If we look at the SPY, looks like the market's not pricing in any recession. Pretty crazy. All right, so what up, Ahmed? So he said LG in stock just came out today. Yo, what up, Luke? He said Rolls Royce. It's been a while. Good to see you, man. We'll check that one out too. Wait, LG in stock. What is this company? I don't think I've heard of them before. Oh, well, they came out today, you're saying? LG in stock. Allegiance. Okay, so yeah, check that out. You're right. They literally just IPO'd. They're up 2% right now since their IPO price. Let me see what this company does again. So installation and maintenance. Oh, this is that kind of HVAC company. They do MEP, mechanical, electrical, and plumbing work. So they're pretty interesting. Shareholders, Blackstone. So again, they just IPO'd, so there's not too much data for me to look at here. But yeah, I got to do more research on what they actually do. All right, let's see. Oh, can you do Carvana? Yo, you won't believe how good Carvana has done. It's that like car vending machine business. So yeah, check this out. Carvana's at an all-time high when they were literally just it was like a $3 stock. They were literally going bankrupt. They burned all the shareholders, the bondholders, and well, now they got a loan, and now the stock's at all-time highs. And here's why they kind of deserve it. I mean, I don't know how they pulled this off, but the sales are up 41% year over year. And not only are the sales up 41, but they're making a bunch of net income. Carvana is making a couple hundred million of net income every quarter, which is pretty insane. So that's what's interesting about Carvana. I wouldn't really touch that stock at this price. They seem a bit expensive, but they have done great. Congrats if you own that one. They have just really impressed me. CEO just cut the middleman. Yo, what up, improvement? What stock were we talking about there? Forgot. All right, let's see. How much do you have on SoFi? So this is a stock I regret every share I've ever sold of. Same with Robinhood, but I have 24 shares of SoFi left. We're up 341% on them. Robinhood, we're up 700% on. Pretty insane. But let me give you an analysis on SoFi really quickly. Oh, we could look at SoundHound AI as well. Sup with Tesla. Yo, I saw Tesla going crazy the past 2 days. They're up like 15% in 2 days. But here's SoFi Technologies. Here's why this company deserves to be at over $25 a share. Check this out right here. They're a fintech. They have their own banking charter. They got it through a loophole. If we look at their financial services, it has grown immensely. And this is why they deserve a high premium versus the market. The business of their financial services are up 105% year over year after growing 80, after growing 230. I mean, these year over year growth rates in the middle are the reason why I love SoFi. And not just the financial services, but the lending as well. Lending's up 30% year over year. People are really starting to just take them serious. I mean, they're super growthy. The combined revenue is up 43% year over year, and out of this $850 million of revenue, $100 million of it was after-tax net income. I mean, SoFi is a beast, and they're really beating on all analyst expectations. So let's look at Rolls-Royce. So yeah, Rolls-Royce right here, a lot of people know them for their cars. Did y'all know they were publicly traded? They're not an American company. I believe they're a European company, so you do pay an ADR fee. But here's what's kind of interesting about Rolls-Royce is because they're not actually a car company. They're really an aerospace company. Half of their revenue comes from their aerospace business. They make like jet engines. The defense revenue is another 25%. So Rolls-Royce is really aerospace and defense company, and that sector has been on fire recently. And check out their bottom line, their after-tax net income. I mean, $6 billion of net income just this quarter. So Rolls-Royce is crushing it. Pretty insane. Can you look at GSAT? What is this one? GSAT, what app are you using? Yeah, hey, by the way, this is a broker where you buy stocks on it. So it's in the link tree in my bio, the very first link there if you want to get it. It's my favorite one, lowest fee. So here's GSAT Global Star. I think this is some like satellite, something like that. GSAT, I accidentally clicked out of it. Global Star. So let's see, they're a small company. Well, not that small, but a $3.7 billion company. Wholesale capacity services. Well, that's up 25% year over year. Spot, commercial Internet of Things, subscriber equipment sales. And duplex. Okay, let me just see what their total revenue is. So the revenue is up 11% year over year. That's decent, at least double-digit revenue growth. They it says they made net income this quarter, but let's see if this was a one-time adjustment. You go to the actual operating profit here, and they actually did go net income positive. They didn't make 19 million, but they made probably 4 to 5 million of after-tax net income. So the profitability is getting tremendously better than the previous year, which is great. They must have done some acquisition. Look at how their assets went up like crazy right here. Here's how you can check that. Yeah, they've been investing a couple $100 million every quarter into new assets. Cash flows look great. So they seem interesting. All right. GACT's value in their spectrum. Oh, that's cool, George. Thanks for that. Hey, what up, John? Good to see you, man. Yo, hope y'all having a great Friday, by the way. So Unilever, what's the ticker symbol for Unilever? Yo, they own a bunch of companies you've probably heard of before, like Lipton Tea, for example. Let's see how they're doing. They're trading at 23 times net income. That's pretty fair for the industry. That's like what Pepsi and Coca-Cola are at. So yeah, they're in personal care products, beauty and well-being products. foods, home care, ice cream. Hey, f- I wonder what ice cream brand they own. And if we go to the net income right here, this is the best part. I mean, they're consistently making easily over $1 billion of after-tax net income every single quarter. Oh, wait, this isn't in USD. They are a European company. So let's convert the money to USD. And as we can see, it's even better. It's, 1.3 to 1.8 billion of after-tax net income a quarter. And no way. Blue 4140 with all the gifts there, dude. Blue 4140 for like the 50 roses, dude. I really appreciate you, man. If you got a stock you want me to look at, let me know, Blue 4140. Thanks for all the roses. Shout out to him. So can you look at how's the portfolio today? Today we're actually down. We're down 0.8% in this portfolio. And where's my Robinhood account? And in this portfolio, we are down 0.78%. To be fair, we did just hit an all-time high yesterday, so I'm not too concerned. But wow, look at Google. Google's almost back to a new all-time high. Meta's up. Constellation Energy. How's the Qs doing? Yeah, Qs are at an all-time high. So the Qs are green today. Market's up 0.4%, but we're down 0.4%. And our Roth IRA is about to be red on the day. But this portfolio is also red. So all our portfolios are red. Okay, let's see. What up, JD? He said, can we look at ISPC, please? Yeah, let's do it. ISPC. So iSpecimen. Okay, so we don't normally cover these kind of stocks. I'd be super careful with these. We don't really cover these companies because if you look at the top right, the whole entire company is worth $18 million. I mean, this is a micro cap. I mean, you can't really, you wouldn't even want to really even consider this stock as one you'd want to just buy and hold for the long run. So I'd be super careful. It looks like they're up 68% today. Maybe that's why you heard of them. But do they have sales? So they lose net income every quarter. So look at the sales. The revenue of the business, the lifeblood, it's down 75% to under $1 million of sales. And they're losing over $1 million in net income a quarter. So I can understand why this stock's, yeah, look at their balance sheet. Now their liabilities are nearly the same as the assets. So I can understand why that one's at all-time lows. I'd be super, super careful. Just from a financial point of view. Yeah. All right. Luke said, can we look at BABA? Yeah, that's AliExpress or Alibaba. So they're kind of like the Chinese Amazon. They're more business to business than business to consumer. But one reason the stock rallied up so much on their earnings because they missed on every metric. They missed on revenue. They missed on net income. But they announced that they're going to be making a graphics card to compete with NVIDIA to fill the gap because NVIDIA can no longer send their best chips to China. So Alibaba said they're going to make their own chips to fill the void, and that's why the stock went up. But they print money. Check it out. They're making easily $5 billion of after-tax net income a quarter, and this is in USD, US dollars. Yeah, as you can see, they missed on their revenue. They missed on their, or this was a one-time adjustment actually. They missed on their diluted EPS. So yeah, that's AliExpress, Alibaba. They traded 17 times net income. Wonder what Morningstar has to say. But let's see. Actually, it won't load because my Wi-Fi is terrible. Sorry. Okay. What app or broker are you using? Yeah, hey, this is a brokerage right here, TJ. Yeah, it's where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. It's my favorite one. But let's see. Can we look at Tempest AI? Hey, Tempest AI is a stock owned by Nancy Pelosi and her husband. You know what? We could actually view that if we wanted to because, Nancy Pelosi and all these super investors actually have to make all their trades public by SEC law. So we can see all of Nancy Pelosi's holdings and its exact weightings and the exact trades and everything. And one of the stocks she owns and her husband is ticker symbol TEM. And I see why she likes this one. If I wouldn't just buy a stock because Nancy owns it. You want to do your own research on it. And when we go do our own little analysis on the stock, I'm only seeing good things. I mean, the financials look great. I'm also seeing some news right here. It says Tempest AI surges over 13% as FDA approves cardiac imaging technology upgrade. Okay, pretty interesting. So anyway, if we look at the genomics revenue, this is crazy good. It is up 115% year over year. That's why they deserve a high premium. This growth is insane at a record. And it's not just that business that's growing, but also their data and services business also at a record, up 35% year over year. These year over year growth rates are nuts. So I'm loving the growth on Tempest AI. Sales are up 90% year over year. They are still losing net income every quarter, but it's all right for the time being because of how growthy they are. And analysts are expecting them. It's not anything analysts aren't expecting. So let's look at RZLV. Yeah, RZLV. So this is Resolve AI. This is a huge momentum play right now. Let's see. Resolve AI launches visual search, replacing keyword search with conversational commerce. So this looks like it's some sort of AI LLM something. I haven't done much research on this one. I apologize, but here's why they're super momentumy right now. So I'd be careful with this one just because of the fact that they're really a revenueless company. Like for the entire year of 2024, the sales were only 200,000 for the whole year. Someone in here probably makes more than that a year. And if we look at how much net income they made or lost, they actually lost 170 million in net income. So unfortunately, there's no analyst that covered this. So maybe next quarter they'll make 7 million. But looks like they're really momentumy. They're interesting. But I'd be careful. The financials don't look great right now. Yo, Fit, thanks so much for the rose there. I do appreciate that. If you got a stock you want me to look at, let me know they're Fit. I do appreciate that. So all right. Ooh, Louis Vuitton stock. Did y'all know they were public? They're actually a France stock. So they are an ADR. You will pay a small fee. I always like saying that just so people know. And if a company pays like a K1 tax form, I'll tell you that too. But this is Louis Vuitton. A lot of the luxury brand stocks have been getting hurt. Like if you look at Lululemon stock, you look at Nike stock, Gucci stock as well. And here's Louis Vuitton. All the stocks look very similar. They haven't been doing too well. They're trading at 22 times net income. Here's what I like about Louis Vuitton though, is how diversified that they are. Like their fashion and leather goods, their basically bags are half their revenue. Then they're in selective retailing, and then they're in some of the higher margin industries like watches, jewelry, perfume, cosmetics, spirits. So yeah, they own Hennessy. So yeah, but this is why the stock is struggling, because the net income is actually down 15% from the same time last year for the first half. They're reporting in halves and not quarters because they're a France company, but still, they're pretty cool. You get a nice yield too, 2.65% yield. I actually like this stock more than Nike because you get more brands with it. Like look at Lululemon, for example. Lululemon's kind of another like premium brand, more, and we can see how their stock is done. They were just $470. Now it's $160. Dang, is that a new like all-time low on Lululemon? That's a new near like decade low. Or yeah, Lululemon's the same price as they were back in 2018. That's unfortunate. All right, so can you do UNH? Yeah, so let's look at UNH right here. Oh, what up, Steven? Arista Networks too. We can look at Arista Networks. Should be on the list. Wait till October 1st. CEO is bragging about Resolve AI. Oh, so wait, oh yeah, United Health. You know who just bought the dip on United Healthcare was actually the homie Warren Buffett. Another super investor that has to make all his trades public. And if we go to his newest positions right here, we go to new. One of his new positions is ticker symbol UNH, United Healthcare. He also bought ALLE and LAMR as a new position. But let's go look at United Healthcare. And the interesting thing is Warren Buffett doesn't buy a stock unless he really does his due diligence. So that's why it was seen as such a good day and such good news. Whenever it was disclosed he bought the stock, they rallied up and gapped up like 10, 13% that day. So, and they've been rallying the past couple of days like crazy. So that's good news. The cool thing about this company is, well, it's a mixed bag here. They're trading at a low multiple. They're trading at 15 times net income just because of the uncertain future. What broker is this? Yeah, hey, it's in the link tree in my bio, the first link there if you want to get this brokerage I'm on. It's where you buy stocks. It's my favorite one. But yeah, we're actually a customer. We use their OptumRx business, and it's booming. It's at a new record, up at 18% year over year. If you look at it on an annual basis, this business is absolutely insane. But you get a nice yield, 2.4% yield. Buffett bought the company, but do beware of these net income projections. Net income is supposed to fall another 50%. Net income per share went from $6 it's going to expected to be $1.70, and that $1.70 of net income per share won't actually be able to even afford the dividend. So the future's uncertain, but it looks like the worst is over. Hopefully, uh, in terms of sentiment, it looks that way right now. But I would be very careful touching them really over $300 a share. I know it's like significantly above that now, but I wouldn't have them as a huge chunk of my portfolio. Okay. Um, Love your analysis. Hey, thanks, it's Zay. I appreciate that. So CLSK or Marathon or also Oracle. You know what? Let's do Oracle because Oracle just had a crazy report. They actually missed on every metric. They missed on revenue, net income, but it was actually the guidance. The guidance was insanely good. They're opening up 37 new data centers. They're they sent up the whole AI ecosystem. Like whenever they're going to open up these new data centers, they're primarily going to be using NVIDIA chips. Also, their billings like went up. Oh yeah, Oracle OpenAI signs $300 billion cloud computing deal. Oracle partners with AMD. Oh yeah, I forgot. Oracle has a huge partnership with AMD, which is pretty cool. Um, there was some other thing like their billings backlog like went up 300% year over year. So it's the future guidance of Oracle that really helped out the business. It's a huge cloud play. Their cloud and license revenue is 85% of their entire business. And if we go to their net income down here, it looks great. I mean, they're making pretty much $3 billion of net income every quarter. Again, they missed this quarter. Net income actually fell year over year by 0.07, but it's that future guidance that really helped out the stock. But it looks like they are kind of falling a little bit. They're still at a pretty premium. But actually, I got to plug in my new growth rate to see if they really are. So yeah, that's Oracle Cloud. All right, so Roblox. Hey, yeah, what up, Eduardo? So Roblox stock. This is a company in the Kathy Wood portfolio. It's 6% of her entire portfolio. And check this out. This stock has some surprising metrics, but there's some good and bad news about this stock. I unfortunately honestly, I wouldn't touch this one over $100. Like it could fall to $100 and it'd still be pretty expensive. And here's why, in my opinion. But here's why they're doing so good. This first reason here is their daily active users on Roblox. It's like that video game, if anyone's heard of them. But their daily active users the same time last year was 79 million. Now it's 111 million. That is a huge increase in the day. And that's the most valuable people, the daily active users. So 111 million, insane. Let's hope none of those are bots. But here's the bad news: they're burning through money. And the trend isn't really getting better. It got 35% worse, but they're losing over $200 million of net income a quarter. They're free cash flow positive, but the reason they're free cash flow positive and GAAP net income negative is because they're paying their employees so much stock. Literally a couple $100 million a quarter goes to stock-based comp, and that's included in GAAP net income, those non-cash expenses. They're also leveraged. They have nearly the same amount of liabilities as assets. So I would be careful with this one at this price, but there's some good and bad news. The sales are growthy, the daily active users are growing, but those net income numbers scare me away from making that like a meaningful position, to be honest with you. Okay. TLRI, I need to know why their net income crashed so hard. Yep, so this stock right here, I feel bad if you own this one, to be honest with you. TLRY, there we go. So they're in an industry I can't really cover. They're in the leaf industry, if you get what I mean. And dang, this was legit. Wow, $150 stock. Now it's $1. And here's why, unfortunately, this one is probably going to continue to go lower. I wouldn't really buy this one. And here's why. If you look at this market cap in the top right, remember this number. The whole entire business is worth $1.23 billion. So the whole company's worth $1.23 billion. In just this quarter, they lost $1.27 billion. I mean, I don't know what happened there. It plummeted their assets. Look what that did. Whenever you lose net income like this, that money's got to come from somewhere. So it came out of their assets, their cash piles. So look at how their assets just plummeted. Did the sales increase? So, they lost this $1.3 billion all for a business that declined 2.3% year over year. So I'd be so careful with this stock. I can understand why they're not doing too well. And then, they lost $1.3 billion this quarter. They lost nearly $1 billion last quarter as well. So from a financial point of view, super careful. Is it still a good time to buy Tempest AI? Not here, not at this price. Tesla is crazy. Is there a reason they're ripping? You know what? That's a great question. Let's go see. They're up 7% today. Let's see if there's any specific news. Tesla secures Nevada DMV approval for robotaxi testing. Tesla Model YL, which is the long version, they just made this. Orders surpass 120K in China. Global EV sales decelerate. Okay, whatever. Oh yeah, there's the $1 trillion pay package. You know, one thing about Tesla is if Elon can grow the market cap to 7 trillion, Elon Musk will be worth 1 trillion. He already owns an insane chunk. I mean, this is how Elon Musk is already so rich. You know, he owns 15.7% of 1.27 trillion. So he's already worth a good chunk. I'm pretty sure the Oracle CEO just passed Tesla's net worth, or Elon Musk's net worth. But let me give you some analysis on Tesla here. Well, actually, maybe I shouldn't, because I don't have anything good to really say about Tesla from a financial point of view. You're buying them for the future growth of the robo-taxi network and the robots. But for right now, the multiple is high. You know, 234 times net income. You know, they're trading at 234 times net income. It's okay to trade at a high multiple if you're high growth, but for right now, they're not growing. But it's the future growth that. But anyway, yeah, like their vehicles delivered were actually down by 14% year over year. We could see the deliveries by model and stuff. But if we just go to their automotive segment, which is 88% of their entire business, it's down 13% year over year. So this business is down 13, and if we go to the energy business, it's down 7.5. So both businesses are unfortunately declined year over year. Total sales are down 12. They actually did a little gap net income trick. They didn't actually make 1.19 billion of net income. They actually made around 800 mil of net income. The margins unfortunately have collapsed over here. I mean, the margin was like a 3% this quarter. So I personally am. Well, I just stay out of Tesla, but my financial analysis doesn't matter because Tesla has such that cult-like following. It just has a mind of its own. Like we were talking yesterday, Spread, like Tesla just has a mind of its own, doesn't really move with the market. So you're buying them for the future growth of the robo-taxi and the robots. You were saying Canada, it's going to be India. There's nothing you can do, haha. Well, I forgot what we were talking about there. What's up, man? I was in Utah the other day. Good day to shoot. Wait. Tesla financials are cooked. Yeah, you're right. It's really a bet on the future. So Mr. Powell said, can we look at CEG? Yo, CEG is a stock I do own, by the way, here in my main account, which we are down 0.69% right now. But CEG is green on the day. If you're wondering what is Constellation Energy, this is the largest pure play for nuclear energy out of any publicly traded stock. They're the second largest utility company in the U.S. They own 50% of all the U.S. nuclear reactors. So legit largest pure play, not even close. There's like Vistra Energy is not even like 50% close. Like no one even comes close to them. So they're just a beast. So it's Constellation Energy. I love them. They also have great financials, great dividend growth, great buybacks, insane synergistic M&A. They just acquired a bit. Not many companies can do this. They just acquired a business and it's synergistic, accretive to their EPS by $2 of yearly EPS. And it's accretive $2 billion of yearly free cash flow. That's actually why the stock, I think it was like this day right here, like gapped up so much. It was on the Calpine deal. Pretty cool. Hey, thanks, Secure Well. I appreciate that. And Lulu, hey, how's it going? Okay, can we look at Joby? Is there a reason you're using Moomoo? Yeah, hey, this brokerage right here is my favorite one for doing analysis. Like you can't really analyze a company on Robinhood and stuff. It's not as useful as this one in terms of all the tools. So let's look at Joby Aviation. So this stock right here, if I'm going to be honest with you, they're kind of like a Tesla. You're buying them for the future because right now this business, I'm pretty sure they're a startup. So yeah, this is a startup. This business, as you can see, did 15,000 of revenue the most recent quarter, down 50% year over year. They did 15,000 of revenue and they lost 300 million, 100 mil last quarter, then 200 mil, 150 mil. So that's something you very much got to watch. The balance sheet's decent. Are they diluting you though? Yeah, they just diluted you by 600 mil. But look at this. Toyota Motor owns 15% of all the shares. But yeah, you're really buying this one for the future. Whenever they transition from a revenue-less company to finally having revenue, I'm sure the stock will maybe go up. But yeah, this kind of scares me. No revenue, insane net income losses. So that's what up, Claudette. I hope you're having a good Friday. Oh yeah, we got to look at Arista Networks. I forgot to get to that one. What up, Steven? Down 7% on the day. Yeah, this is a company that just deserves to be. Wow, they're a huge market cap, $180 billion company. But yeah, this stock deserves to be at all-time highs, which are pretty much there still. Like, check out the huge beat on the analyst expectations. Like, if you just look at the company's financials, usually explains why the stock is either doing so good or doing so bad. And this orange line right here is what the analysts were expecting. They beat on revenue. Look at this huge beat on EPS, which is just net income. Huge beat on net income, huge beat on EBITDA. So it's a triple beat quarter. They sell products. Their product revenue is up 31% after going 13, after growing 42. The growth is just insane on Arista Networks. Also, not just, revenue, but after-tax net income. The net income is just hits a new record every quarter. 888.8 million this quarter. Insane. So Arista Network, they're great. Hey, what up, Jello? Good to see you, Jello. Hope you're having a great Friday. Oh, what up, Marco? Yeah, we got to look at Target too. But one stock that recently reported earnings was Synopsys, ticker symbol SNPS. I bet you can see on the chart where they reported earnings. But yeah, they fell like a crazy percent. They went from 608 to 420. So yeah, it's like a 25-30% haircut. They're in design automation. And that business actually just hit a record. It's up 23% year over year. So that actually is great news. Design intellectual property, that fell by 8% though. Okay, so they actually missed on EBITDA. They missed on their revenue numbers. I wonder if there's any news down here. Nope, not really. So maybe it was this net income number. Wait, how'd the net income do? Yeah, look at this huge miss on or EPS, which is just net income. It looks like they missed by 30-40% on net income as well. They're still making a healthy amount, a couple $100 million a quarter, which is good. But oh yeah, this is basically 54% chop in the operating profit. That explains it. That's gotta be. So something happened to their margins. Oh, but at the same time, something happened to their balance sheet. Maybe their margins collapsed because they did an acquisition. Here's how we're about to tell. So they just did. There's no way. Okay, so this changes everything. Ignore the margin thing because it doesn't matter. They just went through this huge acquisition. They just spent, if this number's negative, that means they just bought a business. They're spending money on an asset like land, or they bought a company. And so it's negative 16.5 billion. They did a huge investment. And how did they get 16.5 billion? Well, here's how they rose the cash. It was either through debt or share issuance. We can see that in their cash and financing activities. But that explains how their assets just doubled in one quarter. They just bought a company. So maybe it was some updates on that investors didn't like. Maybe it was that. Yeah, they make VTOL taxis, I believe. VTOL. Wait, that must stand for something. Or maybe you're talking about this. They make taxis for this stock right here. I don't even, what is this stock right here? Provision of aviation services for energy companies. They're oil and gas. Huh. Interesting. It's like a plane helicopter hybrid. Oh, from Joby. Oh, I'm slow. Okay. I'm new to investing and want to say you're awesome. You help people. Hey, appreciate that, Claudia. Yeah, by the way, if y'all want to hit the follow button, subscribe button, I'd appreciate that. We go live every day. By the way, I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you. Watch out for people impersonating me. So yeah, Marco, let's look at Target. And we can look at TDG as well. And then we can look at Whirlpool as well. Remind me to look at that. So here's Target right here. This stock has not been doing too well. If we look at their yield, this is what I like about Target though. The fact that they have now a 5% yield and the dividend yield of 5% is sustainable. But I don't really expect this one to outperform. Yikes, they're trading at 10 times PE now. That's pretty crazy low. But this is why they're getting hurt versus a lot of more of the grocery stores. Like you look at Costco, Walmart, they're not experiencing the same sort of stock price decline. The reason Target is because they're selling more discretionary items, because only 22% of the revenue is like actual groceries, like food and beverages. Then they're in household essentials, apparel, like t-shirts, accessories. They're in home furnishing, decorations, hard lines, beauty products. So, yeah, and if we look at the revenue, it's actually down. The sales are negative year over year, and the net income is down 21%. So they actually lost their margins by by 20%. It wasn't great. But here's how we can tell if the dividend is safe. They made 935 million of net income just this quarter. And let's see how much the cost of the dividend is. You go to the cash flow statement, and as we can see, the dividend is safe. It only costs 509 million of net income a quarter. So as long as they're making over 509 million in net income, the dividend, they can afford it. So what is TDG? So, then we can look at remind me to look at Whirlpool. So here's, I don't know what stock this is. What's the market cap? Actually, this is a really big market cap, a $72 billion company, but looks like the stock's been struggling. Did they pay like a $90 special dividend that day? So that explains why the stock gapped down on that news. But let's go analyze them. So they're in power and control. And look at those growth rates in the middle. It's very consistent. It's always growing double digits, up 10% year over year. The airframe revenue, also very nice growth rates in the middle, also at a record. So both halves of the business, airframe and power and control, are both at a record, and they're making some very consistent net income. I like this. They're making easily basically 500 million of after-tax net income a quarter. Continues to grow. I wonder what is their dividend cost. They just paid a special dividend. That's pretty crazy. Oh wait, so 4.4 billion. So it looks like they frequently do special dividends. Yeah, $90 special dividend, $75 special dividend, 35, 18, 32. So but they are $1,000 stock, but that seems pretty interesting. Hey, thanks, Ghost. I appreciate you, man. All right, so Chipotle, what up? So CMG, or wait, wasn't there a stock I wanted to? Oh, it's Whirlpool. Hold on. We got to look at Whirlpool. Then we'll pull up CMG. So here's Whirlpool right here. This is a company that sells like dishwashers, refrigerators, washer and dryers, that kind of stuff. And unfortunately, they have not done too well. I mean, the stock is lower basically than it was it was lower than it was in 2016. Let's see. How is the sales doing? So the sales are down year over year. So yeah, the high interest rate environment in the residential market hasn't been doing too well with the high rates. The sales are down 5.5% after they fell 16%, so continuing to decline. But one reason people are excited about Whirlpool is because we're headed into a lower interest rate environment soon, and hopefully in a lower interest rate environment, people will start spending more on appliances. So if we go to the profits, like 75 mil, 79. They lost 390 mil this quarter. The numbers look a little choppy, but let's see how much the dividend cost. Because, all right, did they cut the dividend? Okay, actually they did not. So here's the news. The dividend cost 97 million of net income every quarter. And if we look at the net income, the most recent quarter, it was 75 mil. They couldn't afford it. Also, last quarter was 80 million. So I just like digging into the numbers, showing you the numbers for yourself. So that kind of explains why Whirlpool is the exact same stock price that it was back in 2006. Yikes. Yeah, the business just isn't growing. But lower rates should be a big tailwind for the company. Okay. Adventures, what's up? He said, can we look at Intel stock? Yo, this one's interesting after the US government took a huge stake in this. So yeah, US government acquires 10% passive stake in Intel. Pretty cool. They're getting like $9 billion for this. But yeah, basically, we're trying to bring the manufacturing of chips back to America. Because if you didn't know, NVIDIA just designs the chips. They're actually all manufactured by Taiwan Semi in Taiwan. And we can't really defend Taiwan, which is 6 feet away from China. So we're trying to be more manufacturing independent, especially because we're poking everyone with a stick right now with tariffs and stuff. We need to, be more independent first. But yeah, for right now, the government stake is honestly game changing. I would never even touch the stock before the government stake deal. But yeah, because if you look at the financials, they're burning through money. They lost $3 billion, $1 billion, $16 billion in net income they lost. If you look at the free cash flow, it's not any better, losing a couple bill of free cash flow a quarter. But they do have a huge GPU market share, a 63% PC GPU market share, but they're a couple years behind NVIDIA. Okay, what do you think of RTX? Yo, Michael, how's it going, man? So that's Raytheon. This is one of my favorite aerospace and defense companies. Let me sip my water here. Okay, So they also own like this is like a conglomerate now. They own like Raytheon, they own Collins Aerospace. You get a nice yield as well. So look, even though the stock is at an all-time high, which is pretty normal. A lot of the aerospace and defense companies are at all-time highs. You still get a nice yield, a 1.7% dividend yield. If you look at where the revenue comes from, yeah, Pratt and Whitney, Collins Aerospace, Raytheon. These are great assets to own, and they're making consistent money. This was a little one-time adjustment quarter, but they're making basically 1.5, 1.7 billion of net income a quarter. Then they do share buybacks, they do dividends, they reinvest in the business. So yeah, that's an aerospace and defense company. Okay, will price go down to 20? Yo, what up, AUG? I don't know. Forgot. Did you see the Warner Bros. Discovery buyout? So yeah, this is pretty interesting. If you look at ticker symbol WBD, if you're wondering why is the stock on fire the past couple of days, it's because Skydance is going to acquire the company at around a $50 billion market cap, and they're somehow going to pay 90% of it with cash on hand. Skydance. I forget the ticker symbol. If we type in, oh yeah, PSKY. Here's Paramount Skydance. Yeah, they're also up 6% today. Usually the person acquiring the business is down, but it looks like both stocks are up. They're also going into some agreement, so should just make them a actual competitor to Netflix now, or make them a bigger chunk of the pie. So, all right. Oh, Super Microcomputer. Yo, there was some good news about this stock. I also own this company. Actually, let me pull that up for you. They're one of the stocks that are up today. So yeah, they're up 3%. We are up 72% on our Super Micro shares. Let me go see what the specific news was on here. So Super Microcomputer, they install the chips for you into your data center. Super Microcomputer launches volume shipments of NVIDIA Blackwell Ultra AI systems. So that's why they're up on the day. One thing I would be careful with about Supermicro is we're watching their margins because this is the unfortunate part. Like the sales are up by 7.5, so that's good. Sales are up by 7.5, but the profits, the net income is actually down by 35, which means they're losing their margins. Their net margin was only at 3.3%. The margin was down 40% year over year. So that's the thing that does scare me a little bit about Super Microcomputer. I would like to see the margins come back. That's why I wouldn't really buy them significantly at this price. I'd wait till they really get under $40 to buy them significantly. Yeah. So I do own them, so I might be biased again. So here's GLRE, Greenlight Capital. So this must be a BDC. Let me check the yield on this stock. So they have no dividend. All right. Well, let's see what they do. No analysts cover this stock. The revenue's down year over year. Revenue's down 8%. The net income basically wasn't even positive, or it was 300,000, but it was 29 mil, then negative 27, then 35. When I look at this one financially, nothing's really blowing me away here, to be honest with you. I mean, sales are down year over year. Net income was flat, or flat as in they didn't make or lose any money. Be a bit careful with that one. But how's it going, man? Yeah, I hope you're all having a great Friday, by the way. Market's doing pretty good today. Not my portfolio. We're down 0.75%. But if you go to the actual S&P 500 today, the QQQ is up 0.5%. I believe that's an all-time high. Yeah, the QQQ's at an all-time high. Google's at an all-time high. Meta might be, or no, Meta's not. But anyway. All right, so let's see. Adobe stock. Yeah, Adobe, man. I'm on an Adobe product nearly every day. I'm on either Photoshop, After Effects, and the AI thesis is really hurting Adobe, but I think they've overblown it. They've oversold this one. I think we're always going to need that final touch for art. Adobe launches enterprise AI agents. Okay, well, there's a little bit of news, but I'm on an Adobe product near daily, with Photoshop, After Effects, and Christy said, what app are you using? Yeah, hey, if you want to get this app, it's actually a brokerage where you buy stocks on. It's in the link tree in my bio, the first link there, my favorite one. So all the other ones I'm using as well are linked up there, but this is my favorite one. But yeah, this is their multiple. The PE is basically just their net income multiple plus any buybacks or dilution, and they're trading at 21 times net income. The Adobe's business is still booming. The revenue's growing double digits. They're super net income positive. They're making 1.7 plus of after-tax net income every quarter. It continues to grow. These year-over-year growth rates look fantastic. At this growth rate, what's it going to be the same time next year? The FCF, which is free cash flow, also looks incredible on Adobe. But here's the best part about them, because they don't pay a dividend. So what is Adobe doing with basically $2 billion of extra money a quarter? Well, since the stock is so suppressed, they are legit plowing it into share buybacks. They spent $3.5 billion just this quarter buying back their own shares. $3 billion the last quarter, $2.5 billion the last quarter. And here's what that does for you as a shareholder. The net income is up by 7.5, but the net income per share is up by 12.9 because the share part of the ratio went down so much. So what's the short percent on this stock right here? Oh, very low. It's only 2.5% of shares being shorted. So again, the AI thesis I think is overblown on this stock. I think we're always going to need that final touch. AJ, yeah, hey, again, AJ, if you want to get this app I'm on, it's a broker where you buy stocks on. It's in the link tree in my bio, the very first link there. It's an affiliate link, full disclosure. So yeah, if y'all want to help me out, we'll actually both get like a fractional share of NVIDIA as a little. Yeah, I agree, Chris. Adobe reminds me of Google, where the AI thesis was putting a huge anchor on the stock and they couldn't really go up, but they overcame it. And they realized, and soon investors might realize, oh, actually, Adobe might be an AI beneficiary. Oh, Google, instead of being replaced by ChatGPT, is just implying it in the Google search. Now, if you Google anything, it gives you like an AI overview. They implement it, and oh, Google's now an AI beneficiary. Like, it's pretty crazy how the sentiment can change really quickly. And then all of a sudden, Adobe's a $500 stock. And look at it, Google, by the way, they're at all-time highs. The market was at all-time highs for the longest time, and Google wasn't anywhere near all-time highs. But Google's finally caught up. And here I do own them, so I might be biased. I do own 19 shares of them. We're up 48%. We got a $4 dividend coming in. Let's go. But anyway, let's keep going here. Yeah, I'm doing all my analysis on. This is the best app to do analysis and stuff on. So DeFi Technologies. Do you mean SoFi? Hey, if you got a stock you want me to look at, let me know what the ticker symbol. I'm not sure what that stock is, but what is 8co? Like, yeah, I'm not sure what 8co is. Like, give me the ticker symbol. But someone said a stock, Coinbase. You know who owns Coinbase? Actually, Kathy Wood does. And it's 5.55% of her portfolio. And Coinbase is somewhat like a crypto proxy. It sometimes trades with Bitcoin. But check this out. This is a very cool metric we get. Not just your monthly active users, but these are your monthly transacting users. The metric that's like actually important. And it was 8.7 million for the most recent quarter. So 8.7 million monthly transacting users versus the same time last year, it was only 8.2 million. So we do know a lot of people are loving crypto right now. The revenue only grew by 3.2. I think that's why the stock, the reason they gapped down on earnings was because I think they showed slowing growth. Like the revenue is only up 3. But yeah, investing in I like Coinbase, but they're kind of a pseudo crypto. What happens is, yeah, hey, Rosie, what's up, Rosie? So if you want to get this app, it's a brokerage. It's in the link tree in my bio, the first link there. It's my favorite one. Oh, yeah, and speaking of this, like, tracker thing, the new feature, like, if you go to the Kathy Wood portfolio or something, you can, like, batch trade follow in these super investors and, like, set the weightings if you wanted to follow a super investor portfolio. Like, you could just mirror Warren Buffett's portfolio. I would call no one crazy for doing that. Just have a Buffett portfolio. You'll get a lovely yield. Or the Nancy Pelosi portfolio. Low-key, I love all of Nancy Pelosi's holdings. I would happily own every single one of these stocks right here. PanW, Visa, CrowdStrike, Netflix, they're all great. Anyway, let's keep going here. What up? Beathon said, please see this. I see you, brother. Okay, so Opendoor. Yeah, so this stock is a huge momentum play right now. Accelerate, Professor Pumpkin. What's up, guys? What up, Paul? Hope you're having a great Friday. Yeah, we'll check those stocks out after this. YIBO, BAM. So here's Opendoor Technologies. This stock is begging for a lower interest rate environment. What this company does is they just flip houses. And they're not really great at flipping houses, but also the stock might be going through a short squeeze. We scroll down here and see their short interest percent, 22% of all the shares are being shorted. So as the stock goes up, some shorts might get squeezed out and have to buy back their position, making the stock go up even more. But here's what happens last time we were in a high or a super low interest rate environment, 2022. Look at these growth rates. They were making 4 to 5 billion of revenue a quarter, but check out what happened shortly after as we hiked up rates. The sales plummeted down 70%, down 69%. And so basically investors are really excited to see what happens as we go back into a lower rate environment, but I'd be super careful. That one's all momentum right now. They don't really have great financials. They lose net income every quarter, but they did just fire a bunch of staff and increase their bottom line. So someone said, why IBO stock? They're a $79 million company, so an extremely small market cap. We don't usually cover these kind of stocks in the channel here. Looks like for the entire year of 2024, they did 150 million of revenue, down 0.3% from the previous year. And they did the good news, they are net income positive, but they did 7 million of net income, down 9% from the previous year. So it looks like the business just isn't growing. They did just do some huge investment. Oh, that was for the full year. Where does the revenue come from? So North America, Europe. I'd be very careful. I'd like that they're trading at 11 times net income because they're making 7 mil a year with a $79 million market cap. But you got to be so careful with that one. I mean, they're just such a small market cap. Doesn't take much to move those stocks. So here's BAM. This is Brookfield Asset Management, kind of like a BlackRock or a Charles Schwab kind of stock. So they're a huge one, a $92 billion company. And check out how many businesses they're in. They're in the credit industry, real estate, infrastructure like cell towers, renewable power, incentive distribution, private equity. So they're in a bunch of different industries. You really just look at this. Well, net income, it looks great. I mean, they're making a couple $100 million net income a quarter. The assets just like spiked up. I wonder if they, anyway, yeah, Brookfield Asset Management. There's like another Brookfield Asset Management stock. I forget the ticker symbol. Maybe it's like BA, but yeah, what's the yield on this stock actually? Let me see. You get a 2.33% dividend yield. Nice. Okay, and then, okay, Paul said TXN. What's the app called? Oh yeah, hey, yeah, if you want to get this app I'm on, actually it's a brokerage where you buy stocks on. It's in the link tree in my bio, the very first link there. It's an affiliate link, full disclosure. Or you can just go into Google and type it in. It's just a broker called Moomoo. It's my favorite one. So anyway, TXN. So Texas Instruments. This one has really been hasn't had great numbers financially. And out of all the semiconductor stocks out there, I don't love Texas Instruments. And I'll just show you the numbers for yourself so you can kind of draw your own conclusion. First off, they traded a pretty high, well, not for the industry. Let's see what the industry is. Yeah, so they're trading at 33 times net income. But here's the bad news. If we go to the revenue right here, actually, it has recovered very nicely because for the longest time, the revenue was on this nasty decline, falling 10%, then fell another 10%. But actually, it's up 16% year over year. So the revenue is up 16%. The net income is up 15%. So the margins still did fall a bit year over year. Still decent margins, 30% net margins. They're making $1.3 billion a quarter. But here's the unfortunate part. It's how much their dividend cost. So they made $1.3 billion of net income this quarter. They didn't retain nearly any of that because the dividend cost $1.25 billion of net income a quarter. So they need to at least make $1.25 billion of net income a quarter just to afford the dividend, but then they need to make a lot more on top of that to actually retain some money for themselves because, yeah, they made $1.3 billion, but they only retained $50 million because of the dividend. And last quarter, they couldn't even afford the dividend last quarter. They couldn't afford the dividend the previous quarter as well. So that's my one complaint about Texas Instruments is the dividend is too high of a payout ratio, and it's kind of suffocating them. Ooh, Lead said TPL. This company owns a bunch of land. They basically own like a couple 100,000 acres of land, and they basically collect royalties. They let people get like the mineral rights and the resource rights. They like whenever they find any oil or whatever on their land, they collect royalties because this isn't your typical oil and gas business because your typical oil and gas business doesn't have 62% net margins. Crazy margins. Gross margins are 90, net margins are 62%. That's because a lot of their money they're receiving is through royalty streams. And check this out. They're making a good chunk of net income a quarter, easily over 100 million of net income every single quarter. Get a decent yield, a 0.6% dividend yield. They do special dividends too. Yeah, land and resource management, water and service operations. So yeah, that's what's cool about TPL. They also have a fortress balance sheet. They actually have no debt at all. It's a completely debt-free company. $550 million of cash. That's a huge safety net. Gives them a lot of freedom. No debt on the books. Lots of cash. Pretty cool. Mercos, what's up, brother? He said T-Mobile. I do own this stock, by the way. So I am a shareholder. Actually, I can show you my position if you're curious. Here it is. I got 5 shares of T-Mobile. I'm up 3.5%. That blue line is where my cost basis is. But let me show you why I love T-Mobile. I like them more than Verizon and AT&T. Even though they have a lower yield, they make up for it because they're extremely growthy and they're doing insane share buybacks. So first off, you get a 1.5% yield. They're trading at 22 times net income. That seems pretty fair, 22 times net income. Here's why. So this is a huge margin expansion story. If you look at the revenue is up by 6.8. So revenue is up 6.8. Their Mint Mobile ads are genius with Ryan Reynolds. Has anyone seen those Mint Mobile ads? But the net income is crazy. They're making the net income grew 10% year over year. They're making over $3 billion of after-tax net income a quarter. So what is T-Mobile doing with $3 billion of after-tax net income a quarter? Well, here's the best part about this whole company. The fact that they're plowing money into share buybacks. They spent $2.5 billion in net income this quarter buying back their own shares. $2.5 billion last quarter. The dividend only cost $996 million. The cost of the dividend goes down because they're buying back their own shares and they don't have to pay dividends to those shares. So that explains how the net income is up by 10, but the net income per share is up by 14. You own 4% more of the shares, 4% more of the company than you did a year ago, plus the 1.4% dividend yield. That's what I love about them. Extremely shareholder-friendly company. You have like a 5.5% shareholder yield there. Pretty insane. So Celerate said ticker symbol 4369. I hope I can find this one for you. This is probably a Japanese or Chinese company. 4369. So this is a Japanese company. This is Tri Chemical Laboratories. The stock is the same price that it was back in 2020. So the stock has been flat for a while. But let's see. Let's convert the revenue from Japanese to USD. So high purity chemical compounds. High purity chemical compounds is what they sell. That revenue for the first half of this year, fiscal year, is up 55%. That's good. Their net income positive. Okay, TikTok said I'm AFK. I'm not AFK. To fill out a CAPTCHA. Okay. Actually, everything looks good here. I mean, the net income's up 36. Actually, the margins did fall a little bit. That might be what happened here. The net margins fell by 12% year over year. But still, I mean, everything looks good here. They're net income positive. They're growing. They are Japanese, so you got to pay the ADR fee. If you had to choose between Dave and Sezzle, which one would you choose and why? Yo, Mehmed, I actually, I've kind of already chosen that. I actually bought ticker symbol Dave. I already do own ticker symbol Dave. They're two very similar stocks with very similar stock charts. But yeah, I've taken a lot of profits on this company before. But yeah, I have 4 shares left of ticker symbol Dave. It's been one of my better performers. So yeah, we're up 190% on them. But I also love Sezzle. Love Sezzle. What are your thoughts on the Trade Desk? So yeah, this is that TV advertising company. And unfortunately, they just lost their margins. They also lost Netflix as a partner and they lowered their guidance. Okay, come on. I got to reset this app maybe. Sorry. All right, we got to reset Moomoo. Oh well. All right. So the Trade Desk, this is that TV advertising company. Yikes, look at them the past couple of days. They had a huge red candle on really no news. Actually, it might have been on the news that, so I'll just say this really quickly. Netflix used to use the Trade Desk to find ads for their new ad tier service, but now Netflix dropped the Trade Desk as a partner and uses Amazon. Amazon has a huge partnership with Roku as well. But yeah, here's the bad news. The revenue is up by 18, but the net income is only up by 6, which means their net margin fell by 10% year over year. or 10.7%. So the margin did fall a bit. They lowered their guidance. And here's the thing. This is a high, even after this huge dip that they had, they're still trading at 55 times net income. So they're trading still at a pretty expensive valuation. So that's why, unfortunately, I think this one might go a little lower. So before it totally bottoms out. But I still think they're worth looking into. They're still net income positive, making a lot of net income every quarter. But when you're trading at a high multiple and show signs of slowing growth, that'll send your stock down. Daily Fun said, Grab. Yo, I love Grab Holdings. This stock right here is incredible. Is this Webull? No. Hey, if you want to get this app I'm on, it's actually a broker. It's a brokerage where you buy stocks on. It's in the link tree in my bio. It's that very first link there. And George P610. Thanks so much for the rose there, George. I really appreciate that, man. Hope you're having a great Friday. And thanks, John. I appreciate you being here. It's 2 a.m. here. That's crazy, John. Hey, go to sleep soon. But I appreciate you still being here. So here's Grab Holdings. Wow, they're up 9% on the day. I've been talking about this stock for a while. I love this company. If you're wondering what is Grab Holdings, what did this stock do? Well, they actually do everything. They do the exact same thing that Uber does, but in all these different countries. Like, check this out. They're in Indonesia, Malaysia, Singapore, Philippines. Like, notice the US and Canada and the UK isn't on this list. So that's why it was absolutely genius for Uber to take a stake into this stock. Uber owns 13.5% of all the shares. That gave them instant international diversification. Also, Toyota Motor owns 5.5% of all the shares as well. Pretty cool. Yo, The Wreck. No way, dude. Thanks for all the roses, The Wreck. I really appreciate you, man. He says, can we look at BTAI, please? Yeah, let's check it out. BTAI. What's the app? Yeah, hey, again, if you want to get this app I'm on, it's in the link tree in my bio. The very first link there, it's a brokerage. It's an affiliate link, full disclosure. Or you can just type it into Google, just a broker called Moomoo. So here's BTAI. Yeah, so hey, I'd be very careful with the stock. Thanks again, The Wreck, for all the roses there. But to be honest with you, man, if you look in the top right, this is a $50 million company. So this whole entire company is only worth $50 million. And look at the revenue. So it's just hard to trust this company. Like, just looking at their financials, like, it's a business that did 120,000 of sales, and the sales are down by 90% year over year. So the sales are down by 90%. They lost 20 million of net income. They're net income negative every quarter. They have a lot more liabilities than they have assets. So they have twice as much debt as the whole entire company's worth. So I can see why this one's kind of at all-time lows. I'd be super, super careful with that one. And I can understand why they're at all-time lows. Sorry to kind of bag on your stock there, but yeah, that one doesn't look too good. Okay, Cortec, he said MVST. Is that Microvast? Yo, so not Microsoft, but Microvast. This stock actually has had some pretty good earnings. You know, that's the reason they like gapped up on this day. They had some really good earnings, and they've just been continuing to climb up higher. So check this out right here. If we look at the actual earnings, well, actually, it looks like the most recent quarter was not good. I haven't looked at their most recent quarter of earnings, but they're up 16% of the day, but they missed on their revenue. I just remember the stock was going up so much because the previous quarters, they were beating so much on analyst expectations, but now it looks like that just flipped or something. So do beware of that. But actually, they're technically net income positive every single quarter for the past 4 quarters. If you look at their net income, it says they lost 100 mil. They didn't actually. So, anyway, they're interesting. Cash flows just boomed up. Italy, 40% of the revenue comes from Italy. China is another 33. India and all. Okay, interesting. That's Microvast. I'd still be really careful with that one. Small market cap. It's like big momentum name. So someone said, ooh, thoughts on APLD. You know who owns APLD? NVIDIA does. So that stock is in the NVIDIA portfolio right here. And APLD is 4% of NVIDIA's holdings. And look at how great this stock has done. You know, they've really benefited from being in the AI, from the NVIDIA ecosystem. Because of that, they have a huge partnership with CoreWeave. It should still be down here, actually. Oh, yeah, right there. APLD secures a 150 megawatt lease deal with CoreWeave, expanding their infrastructure. NVIDIA really orchestrated that deal for them. So that's why the stock has really just been doing so well. They like reaffirmed the good news on their earnings report. So yeah, that's NVIDIA does own them. I wouldn't buy them here though. They seem a bit expensive here. Hey, what up? Shlink, he said, can we look at Chewy? Dipped off on positive earnings. Let's check out the earnings here. So here's Chewy stock. Yeah, that's a nasty little gap down there. Let's go look at their earnings and see if we can figure out what happened there. So they beat on revenue, they missed on net income, and they beat on EBITDA. So it was a mixed bag quarter. So the sales were up by 8.5. That's decent. Um, and the operating profit was up 117%. So yeah, I wonder why. Maybe they gave bad guidance. You know, one thing that's happened a lot is a company will report good earnings, but then they'll give bad guidance for the future, and the stock will tank. So I've got to do more research on them. Yes, I really do. What's up, man? He said HPE. Good to see you. HPE stock. I believe that's like Hewlett Packard or Howlett or something like that. Okay. Anyway. So if you've seen those like HP laptops, I believe this is the company that owns that. The stock is actually near an all-time high, which is pretty interesting. Let me go analyze them. So they're in server, networking, hybrid cloud. How's that doing? Hybrid cloud is up 12%. Server revenues up 16 to a record. Networking revenue, wow, look at the networking revenue. Just jumped up 55% year over year. Something happened there. That's great. So yeah, revenue's up 18. Net income is not loading. Hold on here. Sorry, my Wi-Fi is a little slow right now. Net income fell by 40. Was that a one-time adjustment? No, it wasn't. So the net income did fall by 30% year over year. So looks like the margins fell a bit, but looks like investors don't really mind. The stock's at an all-time high anyway. So yeah. Hey, yes, I really do. Thanks for the 10 roses, dude. I really appreciate that. I think HPE has a nice dividend too, but yeah. All right, so let's see. All right, Caleb, he's been saying this one for, let's see, FNMA, so Federal National Mortgage Association. So I think this is some, mortgage lending type company with like single family and multifamily assets. So it's very real estate exposed. And basically, I think they're rallying. I don't know why they've rallied so much. This seems pretty crazy, but it might be the fact that we're going into a lower interest rate environment. $17 billion market cap. How's the net income? Net income is positive every quarter. They're making, wow, 3 billion of 3 to 4 billion in net income a quarter. It did fall 26% year over year, but it might expect it to be going up in the future. Anyway, that's interesting. All right, so can we look at Novo Nordisk? Yeah, we haven't looked at that one today. So this is that weight loss company. So if you've heard of Ozempic, Elon Musk is on Ozempic. If you've heard of Wegovy, well, this is the stock that actually owns those prescriptions. And it's a pure weight loss play, because if we look at where the revenue comes from, 93% of the revenue comes from their diabetes and obesity care products. So it's a pure weight loss play, basically, and they're printing money. I mean, they're making over 4 billion of after-tax net income a quarter. You get a very nice yield, a 3.3% dividend yield with this stock. So yeah, if you want exposure to Ozempic, that's the company. They're trading at 14 times net income. The reason, though, they're trading at such a low valuation versus the industry, and the reason why the stock has been selling off, is because they lose their exclusivity for Ozempic in a couple years. Like they've also seen some increased competition from Zepbound and Eli Lilly. They just cut 9,000 jobs too. But yeah, I think they're worth looking into. I'm new to stock trading. What's your best advice? Hey, just buy the S&P 500. Don't overcomplicate it. Keep it simple. AVTR, please. What is up Among Us? So AVTR, Avantor. So let's see. This is a $9 billion company trading at 12 times net income. The stock is pretty close to an all-time low, which is unfortunate. So let's go see if we can figure out why this stock is at an all-time low. So they're trading at 12 times net income. That's a pretty low PE. Laboratory Solutions, that's down by 3%. And that's up by 3%. So the business really isn't growing much. Yeah, check that out. The revenue is down 1% after falling 3, after falling 9. So the business just has been on a decline for a while. And actually, remember how I said they were trading at 12 times net income? They might not actually be. Let me see here. Okay. Come on, operating profit. So yeah, if we look at this right here, you see net income. You see how it says they made 500 million this one quarter? they didn't actually make 500 million. They only made 150 million in net income. So the multiple is really like 19 or 20 times net income. But yeah, anyway, I want to see kind of the growth come back. It looks like the business is just declining, and that kind of explains why the stock price isn't doing too well. So yeah, that's interesting. All right, PSUS, not so much data, but still in Bill Ackman's investment. Oh yeah, oh Pershing Square. Wait. So yeah, their funds raised $1 billion. So hey, that's interesting. Pershing Square. I know Pershing Square already has a stock. I have it on my watch list. It's a pretty long ticker symbol. I forget what it is, but yeah. Can you check out ticker symbol RACE? Yo, I love this company right here. Did y'all know Ferrari was publicly traded? And check this out. Ferrari stock is doing great. Ferrari is nearly at an all-time high. And, they're consumer. The people that are buying Ferraris are kind of immune to inflation. They're so rich that, it doesn't really bother them. The rich kind of keep getting richer and maybe keep buying more Ferraris. But one thing I really like about the stock is just the profits they make. Cisco, please. Yo, yeah, hey, I really like Cisco. Yo, by the way, if y'all wanted to follow button, we go live every day. Looks like my Wi-Fi is giving me some problems right now, and if it keeps up, I'll probably end the stream in a little. But if y'all wanted to follow button, we go live every day. I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you. Watch out for people impersonating me. But check out these profits. This is ridiculous. Race or Ferrari is making over 400 million of after-tax net income a quarter. You get a nice yield of 0.75% dividend yield with ticker symbol RACE. So yeah, they're one of those like unique stocks. Like I really, really like Ferrari. Ooh, here's a stock I do want to let you beware. I just told Ham, said what app is this? Yeah, hey, I'm on a brokerage right here. It's where you buy stocks on it. So if you want to get this app I'm on, it's my favorite one. It's in the link tree in my bio. It's that very first link there. And it's an affiliate link too. But here's ticker symbol ET, Energy Transfer. I will warn you, this is an MLP, a master limited partnership. So you're not actually buying shares of this business. You're actually buying units. And you're technically a partner in the company when you buy this. So what I'm trying to say is at the end of the year, this company will send you a K-1 tax form. Those K-1 tax forms are notoriously hard to fill out and will cost you a couple $100s with an accountant. So unless you're okay with that K-1 surprise tax form, I wouldn't buy this stock. But because they're an MLP, that's also why they have this super high dividend that's actually sustainable. You get a 7.5% dividend yield. But yeah, it's an MLP. They own the oil and gas pipelines. Looks like the sales are down by 7, but that's just because the prices of crude and oil are down. So anyway, pretty interesting. Rocket Lab, let's do it. So Rocket Lab, this is probably my favorite space stock out there. Wow, all-time high on this company. So if you've ever bought Rocket Lab, you're definitely up on your position. Congratulations. So Rocket Lab, this stock right here is I wouldn't buy this one over $50. It's definitely too high of a price, but they deserve a really high valuation. Like, check this out. Their space systems revenue is super growthy. I mean, look at these year-over-year growth rates in the middle. It just continues to hit a record every year, every quarter. They're nearly at their first ever $100 million revenue quarter. And also, not just their space system that's growing like crazy, but also their launch services. The launch services are up by 59% year over year. Also to a new record, 46 million. It's never even been close to that before. So the business is booming. They also just completed their Geost acquisition, so it'll help the sales grow even more. Do beware, they are still losing net income every quarter, 50 million a quarter. But at this growth rate that they're growing at, it's okay for them. Analysts kind of already know that. K1s are a pain. Yeah, you're right, CYM. My first year investing, I accidentally bought 2 stocks that gave a K1 tax form, and it was a pain. It costed me a couple $100. So, yeah, watch out for the K1 tax form payers. And usually the only stocks that do that are the oil and gas pipelines. Like, actually, all these stocks right here give a K1 tax form. It's all like the oil and gas ones, like EPD, WES Midstream, MLPX, Energy Transfer, Sunco, Plains All American Pipeline. But these also are the stocks that have the crazy high yields, like this stock right here, Random One, 8% dividend yield. So yeah. But also, if you buy ticker, here's a life hack. If you buy ticker symbol AMLP, here's a ticker, life hack. AMLP, it owns a bunch of those MLPs, but doesn't give you a K1 tax form. So it owns Energy Transfer was one of the stocks on that list right there. Energy Transfer was at 12% of this entire ETF. But yeah, it buys a bunch of these things that normally will give you a K1 tax form, but it's an ETF that it gives you a normal 1099 like every other stock. All right, they're interesting. Put them in the Roth IRA or something. All right. So, what app or platform are you using? Yeah. Hey, again, if you want to get the, oops, hopefully my mic didn't just go out. Let me check that. If you want to get this app, okay. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Again, it's a brokerage. It's where you buy stocks on. It's my favorite one. So, yeah, it's that first link in the link tree in my bio. So, let's look at, hey, yeah, try not to spam there. Yo, Dingle, bro, hold on here. I gotta, yeah, we don't want to tolerate spam. All right. So, we won't look at Lululemon. All right, so let's see here. Um, Sweet Green, is that ticker symbol SG? So yeah, Sweet Green stock. This stock is pretty much at all-time lows. I feel bad if you own this stock because they're a very small company. You know, the whole entire company is only worth $1 billion. So the whole company is only worth $1 billion. And here's kind of the bad news. If you look at the revenue, it's only up by 0.5% year over year. So that doesn't really even beat inflation. So the sales, the lifeblood of the company, is only up by 0.5, and the net income worsened by 60%. So they lost their margins. They're losing, near 25 million in net income a quarter. And losing 25 million in net income a quarter is pretty significant when you're only worth $1 billion. That's $100 million a year. They lose $100 million a year. That's 10% of the entire company. That's 10% of the entire market cap. They've also they've leveraged up by 5%. So I can understand why this one's been struggling, but we really want to see them get closer to net income positivity. All right, what is CHEMM? Is that a stock? I can't find that stock right there. What is Story B? Is that a ticker symbol? I don't think I can find Story -B. Yeah, unfortunately, my friend, I cannot find that stock for you. I don't know what kind of ticker symbol that is. Hacksaw or Pine? Yeah, hey, if you got a stock you want to look at, Manny, give me the ticker symbol. What is Hacksaw? So here's a cool stock, though. If you like the solar industry, if you're into solar, this is Enphase Energy, ticker symbol ENPH. They do this. They have the inverters, the little AC to DC solar inverters, and they're finally recovering back from this huge decline. Like the sales plummeted 60%, but now they are starting to recover. And the net income is too. Like if we zoom out to here, they were making over 100 million of net income a quarter. Then it went negative. But now it's finally back to making at least some consistent net income every quarter. So solar also should do a lot better in a lower interest rate environment. Like who's going to finance solar at 7% right now? I mean, they're just not going to do solar. Also the solar incentives haven't really been there. Like they kind of just took away the solar and wind incentives from the Inflation Reduction Act, and they've kind of incentivized nuclear energy right now. Hey, what up, George? You said IDT. What's IDT? So this is IDT Corp. It's a $1.7 billion company, and they're nearly at an all-time high. So hey, congrats if you own this stock right here. Traditional communications. So that actually fell by 5%. That's not too great. Fintech revenue. Look at these growth rates. Incredible. That's up 22. National retail is up by 22 after growing 50. That's good. And Net2Phone. So it looks like all their other businesses besides their traditional communications is growing like crazy. Let me just see the combined revenue. So combined revenue is only up by 0.78. I think that beat the analyst expectations. And they're making net income every quarter. So that's the good news. They're making near 20-30 million in net income a quarter, deleveraging their balance sheet. Here's what I mean. The liabilities used to be 55% of the assets. Now it's only 48% of the assets. So I can see why that one's doing so good. It's like those other sides of the business that are growing, pulling up the slack. So NEE, please. Hey, wait, let me look at Hack right here. Then remind me to look at NEE. That's NextEra Energy. So here's Hack. Wait. I can't find that one. You said ticker symbol Hack, but I'm saying this is an ETF right here. And if we look at their top holdings, here's the top holdings. It's Broadcom, Cisco, Cloudflare, Northrop Grumman. These are great holdings for ticker symbol Hack. Oh, but let's look at NEE then. NEE, this is Next Era Energy. If you live in Florida, most likely your utility bill, one of them is through this company right here because they own Florida Power and Light. This is a utility company only in Florida and only from the state of Florida. They're doing 4.7 billion of revenue a quarter every 3 months. So that's insane. And if we go to the actual profits this company makes, it's insane. And last quarter, it says it was only 464 million. It was actually a lot more than that. There was a little one-time adjustment. It was closer to like 1.8 billion. But yeah, they're making an insane amount of net income every quarter. They're trading at really like 23 times net income. So I really like that one. And the best part, you get a lovely yield, a 3% dividend yield. So cool. What happens is, yeah, hey, August, again, I'm on a brokerage. If you want to get the software I'm on, it's in the link tree in my bio, the very first link there. It's where you buy stocks and stuff. So let's see. PayPal. Oh, he said Pain Pal. Ha ha ha. Hey, what up, Dill? What's up? Let me know if you want me to look at PayPal stock. I'll check it out for you. But someone wanted me to look at CRMD. This is actually my newest position. So if you're wondering what have I been buying lately, my newest position is actually one in my Roth IRA, and it is ticker symbol CRMD. I own 16 shares of them, and I am down by 9%. So I'm down 9% on my position, but here's why I love this company. Not financial advice. As much as I love them, I wouldn't make it as a huge position, but here's the best news. Look at the top right, this market cap. This is a $959 million company. So remember that. The whole company is worth $959 million, and they literally have $190 million of cash on hand and no debt. That gives them tremendous freedom. It's a huge safety net. Legit, 20% of the entire company, the valuation you're paying, is just cash on hand. And also, the sales are booming. It's at a record. The revenue is $39 million. Out of this $39 million of revenue, $19 million of it was net income. I mean, they have ridiculous 50% net margins. The revenue is expected to continue to climb according to the analysts. Like this quarter was a record 39 mil. In 2 quarters, it's expected to be 100 mil. So CRMD, I just made a YouTube video about it. They're a beast. Yo, that's the best way to support me, by the way. If you want to support me, because I sell nothing, I have no course, book, nothing. Subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but you can just type into YouTube Nathan Robert. I'm streaming on there as well. If you missed anything, you can replay it. But yeah, because TikTok randomly takes down my TikTok streams, and it's really annoying. So best way to support me is just sub to my YouTube channel. I'm trying to build up my audience over there. I don't get too many viewers on that stream. So anyway, and thank you to everyone on the YouTube stream. Leet, Mark Herther, Among Us, thank you guys so much. And hey, hit the like button too. It really helped me out. So let's look at CBRE. Is that this is that real estate group. You know what? You're not going to believe this. I was driving down the side of the road next to this like grocery store I normally go to, and I saw a sign of a new like property opening, like managed by the CBRE group. And then I'm like, is CBRE public? I looked it up and they were. So yeah, check this out. They're in a building operation experience, advisory services. Let me just see how the revenue is doing. So check out their most recent quarter. They beat on revenue. They missed on net income, and they missed on EBITDA. So it was a miss. They're still making very nice profits. I mean, they're making easily a couple hundred million of net income every single quarter. So that's pretty cool. Oh, dude, try not to spam. Shoo. So yeah, CBRE, I actually really like this stock. They're on my watch list, and I'm really looking to buy them in my Roth IRA, but I'd love to get CBRE at a lower price. What's dividends? Yeah, hey, a dividend is just a cash payment. Like Coca-Cola right here. Basically, a dividend is, basically just a payment to you. Oh, come on, Coca-Cola. Can we load here? I guess, actually, this isn't the main Coca-Cola company, but yeah, this stock, if you own 1 share of this company, it pays you 40 cents every year in dividends, and they raise their dividend every year too. So it's kind of like it's like basically passive income. Pretty cool. I have a whole dividend portfolio. Nvidia's down right now. Let me actually go check on the S&P 500 real quick. Yo, here's my whole dividend growth portfolio. Yo, so every stock in here, by the way, every stock you see, hold on, let me readjust. There we go. Every stock you see in this portfolio pays a dividend. So this is my dividend growth portfolio. And let me see Nvidia. Nvidia is up by 0.22, but yeah, it is trending down. The QQQ is up by 0.55% on the day. The QQQ is at an all-time high. So, yo, congrats if you own stocks. You know, some of them have got to be doing good right now. All right, but let's keep going here. Can you check KKR? What is KKR stock? Top stocks to buy right now? Hey, one stock I think is a great buy, not financial advice, is ticker symbol SFM, Sprouts Farmers Market. So here's KKR and Co. I forget what this company does, but let me just go look. So they're an asset manager, and they're in insurance. How's the insurance doing? That one's doing pretty decent. They're in capital allocation, net premiums, oh, probably from the insurance business, policy fees. So very diversified revenue streams. Yeah, check out the bottom line. This is their after-tax net income. They're making if you average it out, they're easily making over $1 billion of net income a quarter. So yeah, that looks great. Revenue's up 22% year over year. Do you get a dividend here? And you get a 0.5% dividend. They raise their dividend every year as well. So pretty cool. You know what? Yeah, let's do NVIDIA. So we haven't even looked at NVIDIA today, but let me analyze them. You know, this is they're the largest company in the entire world. They're worth $4.3 trillion. And here's why NVIDIA deserves to be, this size. I mean, first off, obviously, we know they sell GPUs. They have a 20% PC GPU market share, which is pretty cool. They have this automotive software, like Lucid, for example, uses NVIDIA's automotive software for their autonomous driving cars. But NVIDIA is mainly a data center play because that's where 80% of the revenue comes from, is the data center business, because data centers need GPUs, and NVIDIA makes their own GPUs, and they can supply them to their own data centers the quickest and the cheapest cost, the newest models, the quickest. And check out the margins. I mean, they did $46 billion of revenue, up 55%. First off, these growth rates in the bottom are insane. The revenue is up 55%. Or no, sorry. The total sales were $46 billion. Out of that $46 billion of revenue, $26 billion of it was after-tax net income. NVIDIA has incredible margins, incredible balance sheet, incredible cash flow. So NVIDIA is a beast. Again, another just buy and never sell stock. Hey, Adrian, good to see you, man. He said qubits. So this is one of the quantum stocks, and the quantum computing stocks are on fire today, like IONQ, qubits. I wonder if there was any specific news for this industry. Major investments in quantum computing signal industry growth. That's interesting. IONQ stock heads for record high. Pretty cool. So yeah, that's the quantum stock. I don't love them fundamentally, like financially. They should not be that high of a market cap, but I always say that, and they just go up anyway. So yeah. What's SSM? Oh, hey, let me know if you're talking about Sono Group. The stock I was talking about was SFM. This is the stock I think's at a pretty decent price. It's actually the first stock we looked at on the stream. If you want to, by the way, I'm streaming on YouTube, and you can replay it and stuff. The very first stock I look at is Sprouts Farmers Market. I really like that one. Yo, what up, John? He said MEHQ. What is this one? MEHQ. I actually look up MEHQ, and I can't find that stock. I do apologize there. But someone said ticker symbol SWIM. Let's do it. So Latham Group. So I haven't heard of this stock before. In-ground swimming pools. So they actually sell swimming pools, liners, and covers. So this one, Pool Corp is another interesting stock. This one should do better as we're in a lower rate environment. People should spend more on their houses and stuff. Yeah, the net income is a little choppy. It's like they make net income, then they lose some net income. And they are a bit interest rate sensitive, and with the housing market and the residential housing market. But yeah, that one should benefit from a lower interest rate environment. That's actually pretty interesting. They sell pools. It's great to see you. Hey, Looney, it's good to see you too. How did the CPI report affect your portfolio? Well, the CPI report helped out my portfolio. Unfortunately, today, though, we are red. Yesterday we hit an all-time high, an insane new all-time high. Look at the QQQ. Yo! Qs are at a new all-time high right now. So for most people, it's probably a great Friday. All-time high on the Qs, but we're down on the day. RIP. Hit the like button on the stream for me if you want to help me out. But yeah, it's okay. All right. Sony stock. Hey, can you do a fundamental analysis on ACN? Yeah, let's actually check that one out. ACN. Oh, that's Architecture or Akinter. I can't pronounce that word for some reason. So let's see what they They're a massive company, $150 billion market cap. The stock is the same price that it was back in 2020. So the stock has not done too well. Let's see if we can figure out why. So the sales are up. The sales are up by 7.6. The net income is up by 13. So they are growing their margins, 12% margins. They're making 1 to 2 billion of net income a quarter. I mean, you get a 2.5% yield. I don't see anything wrong with this company. I mean, analysts are expecting the revenue to continue to climb up. They're beating on every expectation. I don't understand why the stock has been hurt so much. They're on my watch list as well. They seem oversold to me. Not financial advice, of course. Nothing in this is. All right, so here's one, Sony. I believe this is a Japanese company. So yeah, they're a Japan company, but Sony, Sony, PlayStation, they own a lot of stuff. They're actually a very diversified company, surprisingly. So yeah, they're at all-time highs. They're a Japanese company, and we're going to convert their currency from Japanese yen to the US dollar. And let's see what they're in. So game and networking services, so that's PlayStation. Entertainment technology, they're in music, imaging, and sensing solutions. Let me see here. So the revenue is up by 15%. Net income's up by 15. They're making a steady stream of money. If you average it out, they're making pretty much 2 billion of after-tax net income a quarter. You get a 0.5% yield, low payout ratio. So 22 times net income. Even though they're at all-time highs, they're only trading at a 22 PE. There might even be more upside on Sony. Who knows? So yeah, there's your maybe they're rallying on GTA 6 coming out soon. Maybe it'll help out Sony. I don't know. So yeah, let me know the ticker symbol for 23andMe. Yo, what up, Ravi? How's it going, man? So AGNC, this is actually a dividend trap, in my opinion. I'd be super, super careful with this stock. Like, first off, they're down. In 2019, this was a $19 stock. Now it's $10. A lot of people like them, though, for the yield. You get a 15% dividend yield. So yeah, you're basically buying this to maximize your dividend income. But I don't know how safe the dividend is. I think it's too good to be true. It's hard to trust. Like, usually they're making like decent net income, but thought I heard someone. It was negative 140 million the most recent quarter, so they couldn't afford to pay out any dividends this quarter. But yeah, you're basically buying that to maximize your dividend income. I'd be pretty careful with that one. You wouldn't expect that one to really outperform the market in the long run. So Anthony said, STZ stock. Yo, you know who owns STZ? Is actually Warren Buffett. So if we go back over here to the Warren Buffett portfolio, the watch list right here, if we go to his most recent changes in his portfolio, if we go to his increased positions, one of the positions he increased his position in is ticker symbol STZ Constellation Brands. So it's actually a drink company. They sell, I can't say the exact drink that they sell, but it's the stock's at not all-time low, but the stock is at like a multi-year low. That basically the pandemic pricing dip. Here's why. Let me go look at their revenue right here. So, the organic revenue, the sales are actually down 5.5% year over year. So the sales are down by 5.5, not great. They lost the growth, and the net income is down by 41. So that means they lost their margins. And also the net income just looks really choppy. Like they made 500 million, but then they lost 400 mil. Made 600 mil, but then they lost $1 billion. So we do want to see these net income get a bit more consistent because they do pay a dividend, a 2.9% dividend. And, you can't afford a dividend if you're losing net income. So that's why I think that one's been struggling a bit. But Warren Buffett did buy the stock, and maybe that's good news for the company. App, yeah. Hey, again, if you want to get this app I'm on, it's actually a brokerage where you buy stocks on here. If you want to get it, it's in the link tree in my bio, the very first link there. Oh, Visa or MasterCard? Yo, which would you prefer in a Roth IRA? To be honest with you, those two should perform very, very similarly. But if I just had to pick one, to be honest with you, I would just pick Visa. So here's Visa stock. This company, they have a shared duopoly with MasterCard. The small micro transaction fees that are slowly bankrupting us are making Visa a boatload of money, high margin money. Like they legit, they're making $5 billion of after-tax net income every single quarter. So they're making an insane amount of net income a quarter. And what is Visa doing with $5 billion in net income a quarter? Well, since the dividend doesn't cost much, they're spending all of it on share buybacks. They spent $5 billion this quarter on buybacks, 4.6 bill, 4 bill, 5.8 billion. So they're plowing money into share buybacks. And here's what I love. I mean, the net income is up by 8.2, but the net income per share is up by 12. That's the power of the buyback. So you get a 3% share buyback yield, a 0.7% dividend yield. Visa is a perfect never sell stock. And here we are also, they're in the Nancy Pelosi portfolio. Can you buy IPOs on this app? You sure can. Yes, sir. What's one of the recent IPOs? The Gemini, or is Gemini out yet? GEMI Space Station. Oh, Gemini's out. Oh, hey, look at that. Oh, here's one. I think I had one on my watch list. Oh no, I can't remember any of the IPOs. Anyway, but yeah, you can. All right, so Rocket Lab went crazy. Yeah, new all-time high on Rocket Lab there, Looney. Insane. Hey, what up, Bonzer? What up, Lucas? Lucas said IVZ stock. Is that Invesco? So yeah, if anyone's heard of the QQQ, you know, the ETF, the QQQ, well, this is the company that owns it. This is Invesco. So it's the Invesco QQQ. They basically just own the ETFs. The revenue's up by 2.1. They're making 1 to 300 million of net income every quarter. So they're making a nice amount of net income. You get a 4% dividend yield with this company. Wow. So I'm pretty sure Invesco, that's a stock that owns the QQQ and all the expense ratio fees it gets. What happens is, hey, Strawberry Shortcake, again, if you want to get it's actually a software. It's a brokerage where you buy stocks on. If you want to get this brokerage I'm on, it's in the link tree in my bio. It's the very first link there. So yeah. May I ask why you own QQQ shares? Oh yeah. So yeah, you're right. There's I actually don't own QQQ, but the QQQM is the lower expense ratio version. Yeah, look at that. Invesco. This is the Invesco NASDAQ 100 ETF, and it's at an all-time high today. This is the QQQ, but with the lower expense ratio. They just don't market the QQQM because then they'd make less money. Pretty cray-cray. All right, so let's see. NSSC. What's this one? So Gemini's doing good. Yeah, Gemini's up like 20%. Pretty crazy. So NAPCO Security Technology. So they're a $1.4 billion company. That's a pretty decent market cap. Looks like they just gapped up on earnings. So let's go look at their earnings report and see what happened. So yeah, wow, look at that huge beat. So the orange line is what the analysts are expecting. They beat like crazy. So huge beat on revenue, huge beat on net income, and a huge beat on EBITDA. So it really was a triple beat quarter. I mean, no wonder the stock is up so much. So they're in services, door locking devices. Looks like those sales are down by 6.5. Services, the services business is doing great though. Maybe you have to have like a subscription to use it or whatever. Anyway, it's like some door locking business. All right. Do you recommend MasterCard or Visa? Yeah, again, hey, Visa and MasterCard, I think those two will always perform very similarly. So it doesn't matter which one you pick, but if I just had to pick one, I'd just pick Visa. Okay, so Tomorrow Forward said NFE stock. Let's do it. So New Fortress Energy. So this company is at an all-time low pretty much. They're only worth $380 million. So that's actually a very small market cap. They're only worth $380 million. They're in terminals and infrastructure. So yeah, this kind of explains why the stock's at an all-time low. That the revenue just hit a record low. I mean, it's down 31% year over year. Huge miss. Like, look at that. Analysts were expecting 661 mil. They only made 300 mil. So usually if you look at the financials, it usually explains why a stock is either doing really good or really bad. And that's why I like looking at financials so much. So let's see here. Oh yeah, we'll look at Webull too. Let's look at it now. BULL. So here's Webull stock. This is a brokerage, kind of like Robinhood. So I have a Webull account right here. I've probably given them a lot of transaction fees and stuff. But yeah, this is a brokerage right here. And they just IPO'd. And one thing I like about them is how growthy they are. The revenue is up 46% year over year. So that's good growth. Let's hope they can continue that. They are still struggling with net income positivity. They lost 28 million this quarter, but Webull just introduced crypto back into the app. So that should be a good, future growth driver. I wonder if it'll show that. Nope, I must have already clicked out of it. Wow, Tesla's up 7. Pretty insane. Looks like Bitcoin's up 1.1. But yeah, they should, maybe they'll trade like Robinhood one day. I know Robinhood is super popular. CEG went up with Oracle. Yeah, CEG, you're right. The whole AI ecosystem went up on that because, Oracle's opening up 37 new data centers. Um, they need AI chips. It needs electricity. It needs cooling. It needs it like the whole. It had a whole ripple effect, which is pretty cool. But here's ISRG. This is Intuitive Surgical. I love this stock right here. If you're looking for a medical device company, I think this one, or just like a medical, if you're looking for exposure maybe to healthcare, this one's a pretty cool one that's not like a UNH. They sell instruments and accessories. This business is booming. Look at these year-over-year double-digit growth rates in the middle. That's very impressive, up 19% after going 15, after going 20. The systems revenue as well, that's up 28% year over year. Services is up 23. So all three businesses are booming. So when we combine them, the total revenue is up 21. Look at this net income. They're making 500 to 700 million of after-tax net income a quarter. They have an absolute monster balance sheet. I mean, ISRG has $5.4 billion of cash, no debt. That's a huge safety net. A lot of freedom that gives you having no debt, lots of cash. So at least takes some risks off the table. So Ruben, he said MYNZ. So Main's Biomes. Yeah, we're not really going to cover this stock. We don't really cover these. If you look in the top right, they're only worth $11 million. So it's an $11 million company at all-time lows. Yeah, the whole, just quick, just like think about this logically. You're buying a company that's worth $11 million. You buy the whole company for $11 million. You're buying a business that lost $5 million just in the past 3 months. The 3 months before lost another $6 million, $8 million, $6 million. That's more than your entire company's worth in net income that you've lost. So I think that's why that one might unfortunately just continue to hit all-time lows. Both are ETFs. Would you add them? Oh yeah, you know what? I really like the SMH ETF right here. Yeah, this is a pretty cool ETF. If you're like, I don't know if I should buy Oracle or do I buy Nvidia or AMD? They all seem good, but I don't know which one to buy individually. Well, you can just buy the ETF, ticker symbol SMH. It just gets you exposed to the whole semiconductor industry. It breaks your money down for you. If you put $100 in here, $21 of it goes to Nvidia, 12 goes to Taiwan Semi, 11 goes to Broadcom, 6 Micro, then Micron, Lam Research, ASML. So pretty cool way to diversify into the semiconductor industry. Okay. Sitting on 20K. Yeah, the euphoria is insane right now. Pretty crazy. Hey, I'm glad that it's helping Aventix. Appreciate you. Yeah. Y'all wanted the follow button, by the way. We go live every single day, twice a day. We just look at stocks and stuff. I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you. So anyway, best way to support me though is subscribe to my YouTube channel. I'm streaming on YouTube as well. Just go watch the stream from YouTube and hit the subscribe button, hit the notification bell. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but you can just type into YouTube Nathan Robert. I'm streaming on there as well. If you miss anything, you can replay it. But here's Centene, CNC. This is the next kind of domino to drop after United Healthcare because these Medicare, Medicaid businesses have a lot of like headwind and regulations. Like check this out, 57% of the revenue is their Medicaid business, 19% is their Medicare. So and if we look at this net income, like here's their EPS right now. Again, EPS is just net income per share. They're always net income positive or EPS positive. Well, here's what analysts are expecting. It's supposed to go negative next quarter and go even more negative the next quarter. So they're going to be losing money for a while, and that's really why the stock collapsed. So there's a lot of regulatory headwinds around them. Basically, them and UNH overbilling the federal government, basically giving people those back braces they don't need just because they get a commission. Yeah. All right, so let's see. I'm sitting on cash, crazy pumps. Yeah, Ole Hetty, yeah, I agree, man. A lot of companies that I own, like I just wouldn't pay these valuations for. Like the market is at all-time highs right now. The QQQ, as we speak right now, is at a new all-time high. So yeah, congrats if you own stocks. A lot of your stocks have, you gotta be up on them. You gotta be doing pretty good on your positions. So yeah. All right. So just downloaded Moomoo. Gonna check. Yeah, hey, pretty cool, Stoic Bean. Yeah, I love this app right here. It's my favorite app to do analysis on. Lowest fee brokerage. I keep my idle cash in here as well. I have $1,000 of cash as well. That I also have cash on hand. it's tough buying anything right now, but at least it earns me daily interest. Like I'm making 11 cents of daily interest, which is pretty cool. So is this pre-recorded? Yo, Juan said this is This is not pre-recorded. You can also see the time in the top left, I assume, and you can just check the stock price. But let's keep going here. Yo, what up, Michael? Just got here. What is happening on CNC that was up on Thursday? I'm not sure what happened actually. Yeah. Legend, what's up, dude? He said Celsius stock. Yo, this company is in an interesting spot right now. So, Pepsi just took a huge stake into Celsius, and for that huge stake, Pepsi sold them Rockstar Energy. So, if anyone remembers Rockstar Energy, well, Celsius now owns that, which is pretty cool. Also, Celsius just completed their acquisition of Alani. If anyone's heard of Alani before, that's how their assets just spiked up from 1.8 to 3.8 billion. Alani owns 8.7% of the shares. So yeah, the Alani acquisition finally went through. They're back to making a lot of net income, and they made 100 million of after-tax net income this quarter. So the growth is back on Celsius, which is pretty cool. And Pepsi's happy. So yeah. So let's see here. Do you have any Gemini? Nah, man. Gemini just IPO'd, right? What up, Ruben? Yeah, GEMI. They're up 20% right now. They're like a crypto platform, yeah. Does Monster Energy have a publicly traded stock? Yeah, Monster Energy is publicly traded, MNST. And looks like Monster Beverage is nearly at an all-time high today. So, geez, yo, congrats if you own Monster Beverage. You know, you got to be a happy shareholder. Also, the largest shareholder of Monster Beverage is actually Coca-Cola. So, if you own any Coca-Cola shares, you technically own a little bit of Monster. But yeah, look at that stock price. That's a pretty monster stock price. Just doesn't go down, apparently. People love those drinks, and they get a bunch of free advertising. So yeah. Peter said, you need Palantir. Yeah, let's look at Palantir right here. PLTR. So Palantir, oh, what up, Charlie? Yeah, ClearSpark. Yo, that's a Bitcoin mining company. Unfortunately, Charlie, ClearSpark just doesn't keep up with the price of Bitcoin, but we might check them out after this. So here's Palantir. I would love to get exposure to the stock. Juan said what app is this? Yeah, hey, if you want to get this app I'm on, it's a brokerage where you buy stocks on. It's in the link tree in my bio, that very first link there if you want to get it. But here's Palantir. The thing I don't love is the multiple. They're trading at 118 times sales. So not 118 times profit, but 118 times revenue. But here's why they also might deserve a high premium. I mean, they're super high growth. I mean, the government loves them. A bunch of police stations are using Palantir software. The government revenue is up 49% year over year. That's an incredible growth rate. No other number on here is 49%. So the growth rate is growing on the government revenue, and not just the government revenue, but also the commercial side with S&P 500 companies. That one's up 46. So both businesses are booming on Palantir. They made 330 million of net income on $1 billion of revenue. So that's, 33% net margin. They have an absolute fortress balance sheet. No debt on Palantir, $6 billion of cash. So I love Palantir, but I don't love their valuation right now. So let's look at CLSK. This is ClearSpark. What app is this? Yeah, hey, if you want to get this app, I just said it. Again, if you want to get this, it's a brokerage where you buy stocks on. It's in the link tree in my bio, the very first link there if you want to get this app I'm on. Sorry, I should have like a pinned comment. Yeah. Or you can just type it into Google. It's just a brokerage. It's a broker called Moomoo if you want to get it. My favorite one. So anyway, let's look at, where was it? CLSK. This is a Bitcoin mining company called CleanSpark. And unfortunately, I've never seen a Bitcoin mining company actually outperform Bitcoin. Like this stock is down bad from where it was not that long ago. Give me 1 second. This is not. Okay. Sorry. There you go. Okay. We're back. Sorry. Okay. So ClearSpark, if we go to where the revenue comes from, 100% of the revenue comes from their Bitcoin mining business. So literally this company just mines Bitcoin. You really just look at the balance sheet and look at their net asset value of the Bitcoin. But yeah, they just don't really outperform actual Bitcoin. So Broadcom, sir. What up, LUS? Let's do it. Broadcom. Yo, Broadcom's a pretty great company. And Legend, thanks for the 6 roses there, Legend. I do appreciate that. You are the legend. So here is Broadcom right here. This company is pretty close to an all-time high. They had a pretty stellar earnings report. OpenAI is now going to be using Broadcom's TPUs instead of NVIDIA's GPUs. So check this out. A lot of people know Broadcom for their semiconductor solutions, but one main growth driver for them has actually been their infrastructure software business. Like just a couple years ago or 2 years ago, it was chilling at 1.8, 1.9 billion in revenue a quarter, but now it's exploded up higher, 6.8 billion. The growth is insane over there, and not just growth, but actual profits. Like the FCF, which stands for free cash flow, is up to $7 billion, up 50% year over year. That's insane. $7 billion of free cash flow. Operating profit was $6 billion, up 48%. So the margins are expanding. So I love Broadcom. The valuation might be a bit high here though, but you get a nice yield. Okay, so is Google still undervalued? Oh, and IBKR, Google isn't super undervalued. No, I think Google's a bit I wouldn't be buying at this price really. I wouldn't be buying meaningfully. And even if you do buy meaningfully here on Google right now, I think you'll be okay in the long run because Google is such a great never sell stock. But here's IBKR. This is Interactive Brokers. They're kind of like a Robinhood. They're just a brokerage. And these brokerages, just like Robinhood, have very incredible margins. So if you go to the net margin right here, 40% net margins. That's insane. So if you go to the revenue is up by 7. So, pretty boring. Revenue's up by 7, but the profits, the after-tax net income is up by 25. So yeah, they're growing their net margins, which is great. They did $1 billion of after-tax net income. They're nearly doing $1 billion of after-tax net income every quarter. And at this growth rate, it's just going to keep on climbing higher. Oh, here's some cool, brokerages make a lot of money from interest income and then commissions, market data fees. And we can see daily average trades, 3.55 million. Brokerage accounts, they have 3.87 million paying clients. Pretty interesting. That's Interactive Brokers, kind of like a hood. Marathon, yeah, Marathon is another kind of Bitcoin mining company. So another one that is still significantly off its all-time high. It just doesn't keep up with the price of Bitcoin. So if you're bullish on this one, you'd be crazy not to also just own its underlying asset, which is Bitcoin. Because I've never seen like ClearSpark, Marathon, Bit Digital, or some of these other names. They never actually keep up with the price of Bitcoin. They never keep up with how good it does. Okay, is Oracle overvalued? I think I wouldn't be too happy about buying Oracle today. But here's the ProShares Bitcoin ETF. I believe this is like a Bitcoin covered call ETF. They do like synthetic covered calls on Bitcoin. So yeah, that's why if you look at the actual price of Bitcoin, it's pretty close to all-time highs. Well, this one is down 50% from its IPO price. It was $40. Now it's 20. We know Bitcoin's not 50% off its peak. So what's going on here? Well, that's because this company sells calls on it and it has an incredible yield. So that's why you see a 52% dividend yield, but that's also why it doesn't look really much like the price of Bitcoin. It's still significantly off its high. So you won't really outperform Bitcoin with this one, but it's like you basically buy that to maximize your dividend income, in my opinion. So Carlos, what's up? He said Oklo. This is a nuclear energy reactor company. They make those small nuclear reactors, but out of all the nuclear reactor companies out there, if you really just want exposure to nuclear and are looking for a stock to just buy and hold, this one is not one that I trust because here's why. This is now a $12 billion company. It's all propped up on momentum right now. They're a $12 billion company. They're actually a startup. They're a revenue-less company. It says no data because they've never sold anything. They never sold a product or a service, and they're not expected to for at least another couple years, like 2 years. So they're a revenue-less company, losing net income every quarter. I just could not pay, like in good conscience, a $12 billion market cap for a revenue-less company that's going to open up like two small reactors that aren't going to make much money. So they're a huge momentum play for nuclear. But the best way to get exposed to nuclear is actually through ticker symbol CEG, in my opinion, Constellation Energy. They're the largest nuclear reactor play out there, or they own the most nuclear reactors, 50% of all the US's. So that's CEG. That's the better nuclear stock, in my opinion. And you get a dividend. You don't get a dividend with that one. But they still have done great, super momentum-y. What is CME stock? So, Okay, CME Group. Let's see, how's this stock doing? It's a $100 billion company, so a pretty big market cap. You get a 4% dividend, so nice. You get 1% of your money back every quarter. They're trading at 25 times net income, so that's a pretty decent valuation. Not too high. They're in interest rates, equity indexes, energy, market data, and infrastructure. How's that doing? It's up 13% year over year. So they're very diversified. Agricultural commodities, hey, that's up 9% year over year. Let me just go see down here. So the revenue is up by 10%. Revenue is up by 10, but the net income is up by 16 to $1 billion. That means they're growing their net margins, 60% net margins. I'm actually going to add this stock to my watch list. They seem pretty interesting. The assets continue to grow from 123 to 180 bill. Man, 60% margins. That's ridiculous. CEG has done amazing for me. Yo, that's great. What individual stock has the highest market cap? Yo, that would be NVIDIA. NVIDIA has the largest market cap, a $4.3 trillion market cap. I own Google, which is 2.92 trill. It's probably my largest one. All right, so let's see. What app are you using here? Yo, what up, John Doe? What's up, man? Yeah, if you want to get, it's actually a brokerage. You buy stocks on here and stuff. If you want to get it, it's in the link tree in my bio, the very first link there. It is an affiliate link too, so it would help out the channel. This is actually a stock I haven't looked at in years or a long time. This is ticker symbol PLAY. Has anyone heard of Dave & Buster's? It's like an arcade place. Dave & Buster's is publicly traded. They have not done too well. I mean, they're at their IPO price. Dave & Buster's is the same price as they were back in 2014. So they have not done too well. They don't pay a dividend. Are they net income positive? So the revenue, first off, they kind of lost the growth. Revenue's down by 3.5%. So revenue's down 3.5, and the net income is down by 47. So that means they lost their margins. Yeah, so yeah, these net income numbers are just really choppy to me. I mean, these declines as well. They're really leveraged. Like that balance sheet just scares me. How much long-term debt? Like, where is it? This is the nasty stuff. The long-term debt here, 1.6 billion of long-term debt. I mean, how are they going to pay this off? Making maybe 100 million of net income a year. That's like 15 years of net income. I'd be careful with them. Yeah, play brings me back. Yeah, Looney. Dave & Buster's. Yeah, dead. It's kind of just like a boring business that like huge, like almost mall type stock, kind of like a Kohl's, a KSS. They actually have probably pretty similar stock prices. So anyway, yeah, Kohl's, this one, a $1.7 billion company, 8% dividend. I wouldn't touch that one. So yeah. RH, what is that? Is that Restoration Hardware? So Restoration Hardware, hey, try not to spam there. We will get to Target. RH, this is a furniture company that I really think is should benefit from a lower rate environment. RH, Restoration Hardware, so a $4 billion market cap. Yeah, this one should hopefully do better in a lower interest rate environment. So, because I believe they just sell a bunch of furniture. Yeah. Actually, look at RH. They are making net income every quarter, so that is the good news. So as Cam said, CRDO. You actually got to go here in a minute. So we'll look at a few more stocks. By the way, if you want to hit the follow button, we go live every day, twice a day. Yeah, we just hit the 2-hour mark. So here's CRDO, Creative Technologies. If you ever look at a stock and you're like, dang, it's at an all-time high, or dang, the stock's at an all-time low, why is that? Well, the financials explain it. Check this out right here. This is the incredible part. This is why the stock deserves to be at all-time highs. Check out the growth. The revenue is up 273% year over year after growing 70%. I mean, the growth of the business is insane. And on that 223 mil of revenue, they made 63 million of after-tax net income. I mean, that's incredible net income. Also, an absolute monster of a balance sheet. They have no debt at all. Kratos, a debt-free company, $500 million of cash. So for those reasons, I think that explains why the stock's at an all-time high. And we'll pull up Target here too. You know, Target, this stock right here, Target is basically a dividend play at this point. Like they lost their growth. I mean, they have a 5% dividend yield and the payout ratio is safe. So you get a 5% dividend yield with Target. And unfortunately, the stock price has been getting hit a lot more than your average grocery store. Like you look at Walmart, Kroger, Costco stock, none of them have been getting hit as hard as Target. And that's because Target sells more of that discretionary stuff, like apparel and accessories, home furnishings, and decorations, hard lines, beauty products. So, and if we look at the revenue right here, the revenue fell 1%. So the sales declined, which isn't great. Revenue's down, and then net income fell by 21. So that means the margins fell as well. So, also, here's how we can tell if the dividend's safe. They made 935 million in net income, and if we check how much the dividend cost 509 mil of net income a quarter. So we can see that the dividend is safe on Target J. So pretty cool. Slow down. Which one has no debt? Yeah. Hey, Michael, what's up, man? Sorry. Yeah. If I sometimes I talk too fast. If you missed anything, by the way, I am streaming on YouTube. You can like replay it, rewind. But the stock I was just talking about was ticker symbol CRDO, Credo Technologies, super growthy name. I love their financials. So yeah, unfortunately, I do got to go, my friends. But if you wanted to follow button, we go live every day, twice a day. I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you or DM you. But if you do want to support me, best way is just to subscribe to my YouTube channel and hit the like button too. Hit the notification bell. But I'm streaming on YouTube. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But you can just type into YouTube Nathan Robert and yeah, you can replay the stream if you missed anything. The beginning of the stream is really fun. But yeah, I'm going to be streaming tomorrow as well. This basically same time. So yeah, we stream every single day. Have a great rest of your Friday. Yeah, happy Friday. Let's go. It's Friday. And thanks to everyone on the YouTube stream. Which other ones have no debt? Yo, Michael Anthony, if you're still here, check really. Here's my actual watch list of companies with no debt. Instacart, GameStop. Well, I wouldn't touch some of these. If we find a company with no debt, I put it on this watch list, but it doesn't mean they're a buy. DocuSign has no debt. Duolingo, Pinterest, Opera GX Browser, Zoom, Reddit, Yelp, Powell Industries. All these are debt free. So anyway, see you later. Have a great rest of your Friday, everyone. Thank you, Michael. Thank you, Nemo. Oh, sorry.